Ethereum, Bitcoin, and cryptocurrency. What is it? Good evening, everyone. I'm very happy and honoured to be joined by an expert on this subject and many others tonight to discuss cryptocurrency, Bitcoin, and Ethereum, amongst other things. This gentleman is an expert on economics, a published author, a prize winning fund management expert, and not to mention a former distinguished member of the European Parliament, and of course, a Sandhurst graduate. So, without further ado, to discuss the issues of the day, I'd like to welcome Godfrey Bloom. Godfrey, how are you, sir?
I'm very well, thank you, and delighted to be on the show. Thank you so much for inviting me.
Oh, it's a great pleasure, and I'm glad to have you with me to work our way through this minefield of technical detail, but something that's very much in the news of late. Just to set the ball rolling, though, and I know we had a brief chat about this beforehand, perhaps it might be worthwhile for the viewers if we can get into actually how we got to this point, how cryptocurrencies came about, which I guess really needs some dissection of the fiscal state of the world and the value of currency, which I know you're an expert on.
Well, yes, in order to try and understand cryptocurrency, one has to understand money and the concept of money, which isn't taught in schools. Most academics don't really understand it. Politicians don't understand it. Very few financial journalists understand it. And you have to go back quite a long way. Money is simply a medium of exchange. A medium of exchange and a store of value and a store of wealth, if you will. And money saves us from having to barter. So if you want to have a bus ride, you don't have to exchange a dozen eggs. Or if you want a haircut, you don't have to exchange a gallon of petrol. So that's how money came about. Now, all that's fairly straightforward, but we've rather lost our way in recent decades as to what that actually means. Now, the first paper money, nobody quite knows where it came from, but the first paper money came, one thinks, from China. We think China was the first idea, but that doesn't matter when it originated. How did it get further, and how did it come to Europe, and how did it come to Great Britain in hundreds of years ago? Paper money, fiat currency, call it what you like, paper money. And that's where we've got to pick up the thread, paper money. Now, for 5,000 years, gold has been money. Gold has been money, gold coins and silver coins, but primarily gold, certainly in Europe. Now, people didn't want to cart gold around. It's heavy stuff, it's bulky, and of course it's insecure because you can get robbed. So what happened was banks came about and they issued paper certificates, which were promissory notes on pieces of gold. So you only had to have the piece of paper so you could travel light. So you could buy, you could invest, you could do all sorts of things, but it had to be backed with gold. So that piece of paper was actually a promissory note for gold. And the very old geezers watching this, chaps like myself, will just about remember the old £5 or pound note, which said, I promise to pay the bearer on demand the sum in gold. So it means you could exchange your piece of paper for gold. Now, historically, you might argue that there's been some glitches, there's been some hiccups en route. But that's a subject of, if you will, academic study, and it would take me all morning in a lecture hall to explain that. And it's not necessary. It isn't necessary to understand what we're talking about tonight. Now, a major change came, and it's come and it's gone a little bit. Called the gold standard. But in 1970, the early 1970s, Nixon took the world off the gold standard, and your United States dollar, which was the reserve currency, which was acceptable all over the world, sometimes referred to as the petrodollar, which is what all commodities are based on today, whether it's barrels of oil, whether it's silver, whether it's gold, whether it's copper, doesn't matter. That is based on that was based on the dollar, which was backed by gold. Now they got rid of that. It was called closing the gold window, and Nixon closed the gold window in order to pay for his war in Vietnam. Now, this is always the same. When people close the gold window or get rid of gold backing or an asset-backed currency, it is so they can go to war. Wars are extremely expensive. So that means that the government can print its own money. And that's exactly what happened in the early 1970s with Nixon. And when he came off the gold standard, it meant that you would see the degradation of the United States dollar over many decades. Mm-hmm. So, and that's what's happened today. We find that, for example, the dollar of 1971, that dollar now, its purchasing power is only about 6 cents in the dollar. Yeah. Totally degraded. And what a lot of people don't understand, the basket of currencies, if you will, which include the, the yen, the euro, sterling, and the dollar, the basket of currencies has degraded against gold by 80% since the turn of this century. That's only 20 years. So we've seen currencies debased by that amount. And people are beginning to understand that the degradation of currency is now endemic in the system that we have. And that is why they're turning to alternative sources, one of which is cryptocurrency.
So essentially, the dollar bill or the pound notes are more or less worthless pieces of paper, simply backed up by the promise of the state. And if you start to believe that the state, or you lose faith in the state, then you lose faith in the currency. So effectively, without the gold standard, it doesn't really mean anything unless you make it mean something, unless you have confidence in the state backing it.
You're absolutely right, Bill. Paper money is only worth something if people are prepared to accept it in exchange for goods or services, or as a store of wealth, or sometimes referred to as time preference. So you can store your dollars now or your pounds now, and further down the road, then you can invest it or do what you will with it, but you don't want to spend it now. So it's got to have a store of wealth. It's got to maintain its spending power, its purchasing power. And that's really what that's the point of it. And if you get rid of that, if you destroy that, you destroy the confidence in that paper currency. And we've seen that historically, of course, and the famous one, the most famous one, of course, that every schoolboy knows, or every schoolboy used to know when we had the benefit of traditional educations in state schools, was, of course, the Weimar Republic, where they just printed marks, and if you wanted a night out on the town, you needed a wheelbarrow full of Deutschmarks. That's going back to the 1920s. We've seen
a very similar thing in a failed state in Somaliland, where there were literally pallets loaded high of currency that you could pay, a couple of pennies for, and it was literally, you had to stack them on large pallets for them to be worth a banana or something like that. And so that kind of thing still happens.
It does indeed, but people, when it comes to Zimbabwe and Somaliland, don't take it frightfully seriously, because it's, dare I say, bongo land as far as the average punter is concerned. Now, what happens, this has happened post-war, post the Great War. This happened to Hungary, it happened to Austria, it happened to Germany, and of course, post-war, we saw it happen again in Germany, and currency takes on a different complexion. So post-war Germany, it's what is accepted as currency, and it gets back to this trusted and accepted. So here we have an interesting situation in Berlin in late 1945. It could be a carton of cigarettes. It could be nylons. It could be anything that's easily exchanged for goods and services outside that environment. So it will come to the fore. It will come to the fore, whatever is generally accepted as currency. But you were right, Bill, in what you originally said. Dollar bills or pound notes are intrinsically worthless. They are only pieces of paper, and they don't represent any asset backing. And that is why people are beginning to lose confidence, which means you have seen other things happening. You've seen the price of gold apparently rising, but of course gold isn't really rising. What's happening is dollars are falling against gold because gold has been real money for 5,000 years. So you will now see, and of course we remember the Chancellor Gordon Brown when he was Chancellor, getting rid of British gold for something like $250 an ounce. And this morning it's about $1,850 an ounce, which goes back to my original point at the introduction, that politicians simply don't understand money. They don't understand it. And they've never understood it. And the Chancellor of the Exchequer we have now has no concept of money at all. He doesn't understand it either. And I can come on to that at this time a bit later, and I'll explain why. Now, also what people need to understand is we already have a digital currency. It is not like we used to have. It's not the same thing as we used to have. If you go in now to a bank and want to borrow, say, let's say you want to borrow £30,000 to buy a new car, and you speak to the bank clerk and he knows you're a good chap and you're good for it and you've got a good job and you've got a good track record for paying off, he will then create that £30,000 in your account. It's digital. It exists. It doesn't really exist. There is no intrinsic money anywhere at all. He credits your account. You then buy the car from the local dealer who credits his account with that. So you get this amazing growth in the money supply, which is now out of all control. It's bursting at the seams. Money, 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 money. There's so much of it. And that's the problem. So the more money that you print, and it's not printed now like it used to be in the 50s by De La Rue notes or dollar bills, it's just electronically conceived. But the principle is much the same. The more you print of it, the more it's degraded. And that is the problem that we have. This is created by commercial banks. How can commercial banks get away with it? We have something called fractional reserve banking. So the banks can lend you money that they don't have. Will you think that might send them bankrupt? Well, it would send them bankrupt. But when they collapse, who steps in but the central banks, backed by the politicians, to bail them out? And we saw that in 2007, 2008. The banks can't go broke because the politicians step in via the central banks and bail them out with taxpayers' money. Yeah. So we now had the nationalization of banks, and this is happening all the time. And politicians love it because they don't like real money because they can't buy votes with real money.
And this creation of magical money that certainly Rishi Sunak seems to be a huge fan of, as well as many other chancellor type figures around the world. It's also a recipe for inflation. And if you look at the latest figures coming out of the States, all right, it's still manageable, but it's gone up considerably and caused some flutters of alarm on the financial markets as well. Would it be fair to say that the magic money trees have given off so much fruit that we are at some point going to see a very, very serious inflation?
Yes, we are. In fact, we're seeing it already, but people don't know how to read inflation because they're not trained to do so. And I include financial journalists. We already have inflation in asset prices. We have asset price inflation, which means that your children or your grandchildren, your young professional friends in their 30s cannot afford to buy a house in big cities. So I have a nephew, for example, who's an underwriter at Lloyd's. He's about 30 years old. He's a professional man. He's fully qualified. He couldn't dream of buying a house or even a flat in London, and even a rundown place, because the printing of money has gone into assets, and that's expanded bonds, equities, and real estate. So we've already seen the inflation there. That's already taken place. And there's something called the Cantillon effect, which is a term for those who get the money first. So this production of money, if you're first in the queue, you can use it. So if you are already a householder, if you are already a stock portfolio holder, you're okay because you're already in the game. If you're not in the game, you can't get into the game because asset prices have taken off. Now, let's look at inflation and the way it's measured. Now, the way inflation is measured is fraudulent. It's fraudulent because what happens is it used to be the RPI, the retail price index. Now it's a CPI, and it's engineered by politicians. So they tweak it. So what goes into that basket is stuff, they cram it with stuff which hasn't inflated particularly. So things like white goods, laptop computers, things which have stayed with production techniques improved fairly flat. But of course, if you look at other things, services rates or property tax for those Americans perhaps watching the clip, all that's gone up by significantly more. So it isn't they say, oh, it's only 2% or 3%. That actually isn't true. And if you look at things like shadow stats and various other American situations where they actually use a different basket, you will see that inflation, even high street inflation, not Wall Street inflation, high street inflation is running round about 9 or 10%. And that's when lots of viewers will be going, I don't buy this 2% inflation business. I know in my daily life that prices are going up very much higher than that. And they understand that because they're on the sharp end trying to make ends meet. So your actual figures for inflation are dishonest and fiddled by politicians. And this is the problem.
I think most people watching would relate to that very much. And as you were saying it, I was thinking exactly my experience. You know, you go to the shops from one week to the next now, and it seems the shopping basket is becoming more and more expensive, and yet the TV and the newspapers tell us that it isn't. And yet you know very well the evidence of your own pocket. So we have this situation has arisen through years of fiscal mismanagement, to put it politely, through years of devaluation of currency. And suddenly it would seem these almost mystical to many of us cryptocurrencies begin to become to the fore, and people start to invest quite heavily in them. Your view on the beginnings of that, and you know, how do you see that developing?
Well, cryptocurrency, and I think we need to really talk about Bitcoin on this particular interview because it's relatively short, and I don't pretend to be an expert on other cryptocurrencies. And I do have colleagues who I work with on books and stuff like that who would be more fruitful to interview. But broadly speaking, now today, we're only talking about the principle. Now, a lot of young people, bright young people are waking up to the fact that money is being degraded all the time, and how can they get out of that degradation? So old geezers like me, the equivalent of a pint of bitter, when I bought my first pint of bitter in a pub, I think was something like 1968, it was the equivalent today of 5 or 6p. In York now, and that's York, this isn't London, York, I would expect to pay £4.25, maybe £4.30 for a pint. We know that inflation has gone up. A family car, only 5 years ago, you could buy a very good family car for 15 grand. It will cost you 30 grand today. So we know it's all going up all the time. And people have noticed that, and they want to get out of that run. They want to get out. And what can they do? They feel that if they buy the cryptocurrency, and where is the advantage to Bitcoin? The advantage to Bitcoin is that it can't be inflated. Government have no control over it. They don't have any control. So what they can't do, they can't inflate or degrade crypto because you can't make any more of it. There is a finite amount of Bitcoin. So it's become extremely popular. Now, it comes with a certain amount of baggage, and that is that it's volatile. It's volatile. So as a replacement for money or real money, historic money, which is gold over 5,000 years, it's very volatile at the moment, but it's a relatively new game on the block. I'm a Bitcoin holder. I think it's a wonderful invention, and I'm firmly in favor of it. But it does come with a bit of baggage. Everything comes with baggage. Gold comes with baggage. And the reason gold comes with baggage is because people are selling forward. There are 500 or 600 pieces of paper, promissory notes, to every piece of gold. So the price of gold is being gamed all the time. And that's coming to an end probably next year with the Basel III regulations coming in. And we won't go down that route now because that's sort of chapter 2 or chapter 3. So people are going into Bitcoin. Now, one of the problems that we have, it is volatile, but people with a longer time horizon, like young people, can get into Bitcoin because their time horizon is longer. Old geezers like me want to hold on to the money that they've made. We don't want it volatile. We don't want the speculation. But the two things are quite different. Gold is a preservation of wealth. And I always say when I'm lecturing at universities, and I hold up, I forgot to go and get one, a gold sovereign. It's mine. The one I show is dated 1908. A gold sovereign will buy you in 1908 bed and breakfast in a good London hotel. If you sold a gold sovereign today, it would buy you bed and breakfast in a good London hotel, and it will do so in 100 years' time. It's a preservation of wealth. Now,
Yeah.
Bitcoin have come along, and maybe in 10 years' time, or 15 years' time, or 100 years' time, Bitcoin will buy you a lot more than bed and breakfast. It'll buy you bed, breakfast, dinner for 2 days. I don't know. It's volatile and it might go up. And the supporters of Bitcoin think that that's the way it's going to go. But at the moment, Bitcoin is an investment rather than money. Now, when Elon Musk came in and he said, I would accept Bitcoin in exchange for my cars, you know, Tesla.
Yeah.
Now, that looked like it was a major step, because if you could buy direct with Bitcoin, it then becomes real money. Because at the moment, you have to turn it back into fiat currency in order to buy something, to buy your car. So that is really your problem. And until you can do that, I was hoping maybe that Mercedes would follow, Ford would follow and say, yeah, we'll accept Bitcoin for cars as well. And that would have been a major breakthrough. That didn't happen. Elon Musk stood back and then said, no, I'm not going to sell cars for Bitcoin because it's a threat to the environment, which of course is complete and total bullshit. But what had happened to him, because he sells Tesla cars as eco-friendly in California, he's heavily subsidized. So he had the hard word. You can't have your cake and eat it, Ellen, they said. You're either a big going to save the planet greenie guy or not. So he had to back off, and he backed off. And of course, the banks hate it. Central banks hate it. Bill Gates, who actually really runs the world, hates it. And so there is a huge establishment pushback on Bitcoin, understandably, because people lose control. Bitcoin gives control to the little people. And my goodness me, that's not what the establishment want.
Oh no! I mean that's the direct opposite to the whole thrust of world policy at the moment. But I mean, you mentioned the volatility and Elon Musk. I mean, his comments this last week were really knocked a dent in the value of Bitcoin, and there was quite some concern. And this was one of the reasons I think why so many people are interested in the concept of it at the moment. That, all right, one very important man, very important, but he can make a statement and the value just drops away. And I think people are left hovering now about Bitcoin and other cryptocurrencies. I mean, the whole concept itself of data mining that goes on with these cryptocurrencies, I think it's one of the reasons why there's not more take up, is because it's somewhat obscure to the less technically minded, I would say, and for something to become a more regular mainstream usage, I think that might be the sort of Achilles heel that it's got. But it's a little bit hard to understand, a little bit ethereal for Joe Public.
You're absolutely right. It's awkward. It's slightly awkward. When I came into Bitcoin, I've been following Bitcoin for some years, but I didn't come in as an investor until last October. And the reason I did that, if you want to understand any form of asset class, you really have to hold it. You can't really do it from an academic perspective. You have to hold it to get a real handle on it. So I came in October and I have traded, which is unlike me. I'm not a great trader, never have been. I'm a buy and hold person. I manage fixed interest in the city. I'm a bit stuffy and a bit cautious, but I did trade it, and I have been buying on the dips, and I've done quite well. I've made some, I've made some good money, but I'm not in big enough to make serious money, but that's okay. So buying on the dips is good. But if you look at the numbers, and you look at the capital value of Bitcoin, it's really quite high if you look at it compared with other things. I think it's behind Amazon as stocks of Amazon. It's behind one or two other things, but it's pretty high. And I think what's happened is that Elon Musk talked it up and then talked it down, which adds to the volatility. But even $1 billion, he claims he didn't sell his $1 billion worth. He claims he didn't sell it. So perhaps if he didn't sell it, maybe other people sold to the tune of that to bring the price down by 12, 13, 14%. And people lost their nerve. It flushed people out, as these things always do. Bonds, equities, everything, it flushes people out. That's the nature of investment, and it has been since the beginning of time. It flushes people out. But of course, we haven't really seen Bitcoin come into its own yet, because although it's slightly ephemeral as a concept and it's slightly complicated to get into and look after, and you have to hold it in a wallet, it's like gold. If you don't hold it, you don't own it. It's got to be in your safe or your safe deposit box in town, or it's got to be in your wallet. If don't accept a promissory note for it. Don't let anybody persuade you they're holding it on your behalf, because they're not. They can get their hand in the till. So you must own it. And I think, but we still haven't seen, have we? We haven't seen, we're still not talking about debt. The United States Fed are buying $120 billion a month of federal debt. Now, because mainstream media, financial journalists, and generally speaking, most of mainstream don't understand it, because basically, you know, and I know, after years in politics, Bill, they are incredibly thick. So they don't get it. So when we have a budget, for example, we have this ludicrous situation where, because they don't understand it, they're more interested in what the duty is on petrol, the duty is on cigarettes, or the duty is on alcohol. Now, the fact that our Chancellor in the United Kingdom is actually nearly £3 trillion in debt seems to have slipped his mind. So he's talking about increasing inheritance tax by a little bit percent, which will raise $1.5 billion in tax. And what he doesn't understand, and doesn't seem to understand, and I have met him, and he's a charming man. He's a charming man, but he just doesn't understand money. That's a bit like being 15 months behind with your mortgage and trying to catch up by stopping the newspapers. It's meaningless. Now, what he doesn't consider is stopping spending. Now, we know the reason he says, oh, it's 2 trillion, even the mainstream media admit it's 2 trillion, but it's nearer 3. Why is it nearer 3? Is because public sector index-linked pensions, which cost somewhere a region of 800 billion, it's a liability, which he never puts forward in his budget. He won't do it again. No chancellor from any political party talks about the impact of index-linked public sector pensions. They're all too frightened to talk about it, but that's the elephant in the room. And until he does something about that, we're never going to dig ourselves out of this debt hole. Debt needs to be serviced. The only way, if you do it at 0% or 1% interest, you just have to print more money. You print more and more, and you then degrade the currency, and you're back in that merry-go-round yet again. I wish I could persuade chancellors to understand it, or financial journalists. I think Alistair Heath might, Liam Halligan might, but they're the only, and they've got Mickey Mouse financial journalists. Dear, oh dear. The average financial journalist is the guy who got dicked at the Christmas party when they were all pissed.
Well, yeah, that's an insight into financial journalists for us. But I think it's interesting you mentioned about the inheritance tax. Slightly to digress, but we are talking about a conservative chancellor who's talking about increasing the tax on money that's already been taxed. I can think of few things less conservative to do, but of course that would rely on some kind of principle which they appear not to have. So realistically, we've got a chain of these politicians, all of them absolutely reticent to really tackle the issues head on, all of them allowing this debt to continue to grow, which means that the temptation of Ethereum, Bitcoin, so on and so forth, cryptocurrencies. And Ethereum, I think, is neck and neck with Bitcoin now as on the cryptocurrency exchanges. The temptation has got to grow, hasn't it? Because you and I, and then most people out there watching, will realise that the fiscal situation in the Western world cannot continue indefinitely. But we also realise that no one's got the balls to actually deal with it, and there's going to be a major problem, and there needs to be somewhere to put your investment.
You're absolutely right. And a gold bug friend of mine in Switzerland, and I'm a gold bug, long-term gold bug, he said it's probably more dangerous now to not be in the Bitcoin market than in it. You should have some of it in your portfolio. And people who are watching this, don't confuse it that it's an investment. Don't confuse it with money. It's an investment. And as this grinds its way through, this collapse of paper currency and the collapse of the banking system, it's going to be a very good thing to hold. But a word of warning again here, which a lot of the cryptocurrency community don't fully understand. They don't think that the government can steal it. They think because they have their top secret wallet with their top secret password, and numbers that the government can't steal it. And of course, this isn't true. It can be stolen in a number of ways. Firstly, if the big banks make a book on it, or BlackRock or these people make a book on it, like they make a book on gold, and sell forward Bitcoin, which they don't own, and people buy it in exchange traded funds. So people, your punter, because it's so ephemeral and difficult to get into, he goes to see his financial advisor or the bank and says, do you want cryptocurrency? Do you want Bitcoin, or do you want this, or do you want that? He says, well, I don't really understand it. Why don't you have an ETF, an exchange traded fund, which has a broad spread, and our experts, you know, will put that together, that portfolio together for you, and we can buy and sell on a daily basis in the same way with any exchange traded fund on index linked stuff, or gold futures, or whatever it is. And that's how people will buy it. And then it will be manipulated by the banks in the same way that gold is. And that will be a problem. So the value can be manipulated by the banks, by the investment banks, which are the establishment. Goldman Sachs are the establishment. BlackRock are the establishment. You know, these characters, which is why they recruit last year's chancellors, last year's politicians, the president of the European Union, they all go and work for Goldman Sachs. And then Goldman Sachs recycle them back to become Chancellor of the Exchequer. They're all crooks. They are all crooks. And it's the merry-go-round. But one thing you can be sure of, they will feather their own nest. The other thing is, of course, and it's starting to come about now, the tax revenue people are beginning to look at Bitcoin and saying, you've got to declare it. All right. They've already said that we're going to have a system where you have to declare it. And people are saying in the Bitcoin community, I just won't. And they don't have my passport. They don't. Now that's being very naive.
Yes, indeed, it is.
Very naive, because the tax revenue authorities now can assume you hold it. They will assume, and they can get access to your bank statements over the last 6 years. They can do this with gold, incidentally, as well. They can do this with gold. Every purchase over £10,000 worth of gold is logged, so they can come from your gold. They don't have the key to my deposit box, but they can come it, because all they've got to do is turn up on my doorstep, put me in solitary confinement until I tell them where that gold is. So the state can do it. And if every state's doing it, if the Fed wants it, the Bank of England, the Bank of Japan, the ECB want the gold, and they do, which is why they're collecting gold at the moment in the central banks, they've only got to turn up. And this is what happened, of course, in 1930s America with Roosevelt, who was another thief of the highest quality. He turned up and he confiscated American golds. You weren't allowed to hold gold coins. That can happen again, and that can happen with Bitcoin. They'll just go through and they say, we think you bought Bitcoin.
Yeah,
and these are Bitcoin traders, and these are, they say, we must assume from your bank statements over 6 years you have £100,000 worth of Bitcoin. We are going to assume you have £100,000 worth of this, unless you actually hand it over. You're banged up in solitary confinement again. And of course, you know, and people think, oh, that's a bit far-fetched. Well, you know, the last 14 months, the whole of this country is under martial law. A policeman can ask you where you're going.
Exactly.
Legitimately. Don't tell me it's far-fetched. Oh, don't tell me it's far-fetched.
Oh, no. And this has been coming for a while. I mean, anyone who has a slightly longer memory than last week can remember Greece and the fact that people had their money stolen from the banks in Greece. And, you know, the fact that it can't happen here, it can't happen now. It can, it will. And, you know, you rightly mentioned the last 14 months. I mean, the changes to society, to the way that we live, never before conceived of. So if you think that your money or your gold or your Bitcoin or whatever else is entirely safe and that the state has boundaries, well, take a look around you and ask you where those boundaries are, because I don't see any anymore. I don't believe that there are boundaries to state control. I believe that, you know, that we have witnessed a coup against the people, and that's why I think people are getting so concerned, and they are looking at cryptocurrencies, Bitcoin, Ethereum, etc., as possible ways out. But as you rightly point out, Godfrey, it isn't, to coin a phrase, a cast iron guaranteed way out. We've got people terrified here. I wonder if there is a way out, a way of some more security that the government can't come and steal from us, or are we just doomed to be living in a society where we don't know whether we're going to have any assets from one day to the next?
Well, there's a couple of things. You've raised a number of points there, but a particularly good point you raised was Cyprus. Now, this raised the concept, which is a big debate going on at the moment in Australia, on what is known as a bail-in. Now, there's a bail-in and there's a bailout for banks, and there's these two different things. Now, a bailout is when your bank goes down, your building society goes down, which is what happened in 2007. It started with Northern Rock, and it spread then because they all owe each other money. They all piss in the same pot. So you're going to find that this is the problem. You can't have one bank going down. When Deutsche Bank goes down and Santander go down, it'll bring down all the European banks. And probably bring down a lot of the American banks as well. You can't isolate banking because most lending is interbank, not to the punters, it's interbank, and that's how it works. So now the bailout came along in 2007. The taxpayer bailed everybody out. The British taxpayer bailed out the British banks, and incidentally the Irish banks, which they've never said thank you for. we bailed out the Irish banks, incidentally, and paid.
They've not shown much gratitude.
We paid 100 cents on the dollar. I was still heavily connected in the city when this happened. We couldn't believe it. We couldn't believe it. You were holding a high coupon Irish bonds, and the taxpayer bailed us out. Criminal. Nobody went to prison. Unbelievable theft on that scale. Nobody's in prison. Everybody got their bonuses. No bankers have gone to prison. All right. No bankers have gone to prison. They're all crooks, and the politicians are their mates. So they're all locked in together. Now the bail-in. Here's what happens with the bail-in, and this is clever. What they do, and people think, oh well, I'm protected. I've got £50,000 in the bank, and that's protected by the bank deposit scheme. Well, you know. Dear oh dear, naivety again. Who do you think? Where's the money coming from? The bank deposit scheme? Well, it's a taxpayer again. The government doesn't have any money. The banks don't have any money. The banks are all broke, and so it can only be the taxpayer. So you're going to pick up. The punters are going to pick up the tab in one way or another. But the bail-in is clever. They will then say, right, Bill, you had £50,000 in your deposit account, and we don't have it. It's gone. It's gone because it's not there because it's fractional reserve banking. They don't even pretend to have it. What we're going to do with a bail-in is we're going to give you bank bonds. We're going to give you £50,000 worth of bank bonds with a coupon of 4%. We'll exchange it, or preference shares in the bank. The bank's broke. So why would you want? But that's what they're going to offer you, and that's what they call a bail-in. And the legislation is already in place for that. I think it's going through in Australia, and it's going to be that's what it's going to be everywhere else, because now the debt is so big they can't bail out. Now with it's hundreds of billions. The government can't do it again. So it'll have to be a bail-in of some description where they will issue more worthless paper. So paradoxically, the most unsafe place you can have your money at the moment is in a bank deposit account.
Yes.
And most people don't know this. Most undergraduates that I speak to, when I've stopped being invited, they won't invite me anymore. I've been banned from Cambridge and Durham and places because I keep telling the truth. By goodness me, the academic world don't like any of that. No. I'm a really bad guy. But this is a sort of problem that we have with people not understanding. Now, this change, would you believe this changed? Oh gosh, people watching this will pick me up probably. I think it's the 1837 Bank Charter Act. I could be a few years out. Forgive me, I'm an old man. I forget dates, but I'm pretty damn close. And that means that when you put your money in a bank, it doesn't belong to you. You put £50,000 in that bank on deposit. You think it's yours and the bank is safekeeping. You're not. That isn't how it works. It's theirs to do with as they will, and they issue a promissory note. And if they go under, there's nothing criminal. That's how it is. Now, if you were to do that, let's say a corn merchant. Let's say you have your harvest and you have 10,000 tons of corn, for example, and you give that to him, and he charges you a fee for looking after that, and you release it when you think the price is right. If he sells that to somebody else, he'll go to prison. That is theft. A banker doesn't do that. It becomes the bankers. And with fractional reserve banking, he only has to keep 10% of that, let's say 10% roughly, under Basel III or coming Basel III, the rules and regulations, which are incidentally are all fiddled anyway. He doesn't have to keep that. So This is the system. Nothing is safe. There is nowhere you can put your money which is 100% safe. But if you have gold coins in your own safe deposit box in a big city, not a bank safe deposit. No, not a bank, because they'll just walk in and take it. Because the banks have been nationalized by that stage, and that will all belong. They'll just open up your safe deposit box. It's got to be independent. They can still probably get at it because they've got an audit trail of when you bought gold. So they can probably still get at you. And it's the same with Bitcoin. They can do an audit trail. But you see that you can't run away. You can't run away to everywhere because everybody's running the same game. International investment banks, the Fed, the ECB, and on my website you'll find an interview with me interviewing Draghi, president of the European Central Bank, explaining to Draghi that these figures didn't match, they don't match up. It's Alice in Wonderland. And of course the famous clip which got me into trouble with my fellow MEPs who were crawling up the man's bum, he said, well, you'll just have to trust me, Mr. Bloom. And I said, you're a central banker. I wouldn't trust you as far as I could throw you. So all this is coming down the road. But the best thing to do is to spread it around, have a bit of gold, bit of silver in specie, a bit of Bitcoin, scatter it about. If you can trust your son or your daughters, don't give it to your wife, because she'll they can't help themselves, bless them, can they? So give it to somebody you could trust, who probably is going to end up with some of it anyway. Favored nephew or something like that, and start the 7-year clock running for the gift under the current inheritance tax thing. You have to spread it around. You have to become, but 100%. There is no 100% way of saving your money from the state. If the state want it, especially when there's every state, it would be all right. In Germany, in the Weimar Republic in the 1920s, and the Deutschmark was totally degraded. It didn't matter because you had your French franc, you had the dollar, and you had sterling, always sound asset-backed currencies. So you could actually run away there and do something about it. There is no hiding place globally now. Not even Switzerland, incidentally. Not even Switzerland.
So effectively, we've come full circle. We started our conversation speaking about gold replaced bartering, and then things moved on from there. It would appear that we're coming quite close to the point where gold, although not entirely secure, unless you've got it hidden away in your own safe, gold is probably going to be the fallback position maybe in years to come.
As it has been for 5,000 years. And if you go back, funnily enough, don't need to go back that far. JP Morgan, who was a crook of the first water, top guy, and I think it was 1912, he said, only gold is money. Only gold is money. And don't forget, well, that coin I was talking about that will buy you a bed and breakfast in 1908, bed and breakfast now, and bed and breakfast in 100 years. Don't forget, that's not just true of London. That's true of New York or Delhi or Sydney or Rio de Janeiro. Doesn't matter where you go with that coin, they will take it. They will take that coin. And in fact, in Buenos Aires, you get bed breakfast and probably get a mucky hooker as well bunged in for a gold copy.
Well, that sounds a bargain. That sounds a bargain.
Pure speculation.
But I think we're coming towards the end, and we've covered a huge amount of ground. And I think it's important that people watching this, and I'm sure many people, just as I am whenever we speak on these subjects, are fascinated by what you've had to say. You do have your book still out there in print, don't you? And it's been updated, I believe. Give us a few words about your book and how people can lay their hands on it.
My book, if I may plug, my book, The Magic of Banking, the Coming Collapse, is now being upgraded. It's the third edition. So all the graphs are up to speed. So they now take us up to 2020 with the growth of money supply, M1, M2, and the gold prices and all that. It's going to be bang up to date. Not quite ready yet. Hold back. Don't buy any more of the old one. Wait till the new one comes. It's only going to be a month or so away. I brought in some guest contributors. I put in some guest contributors who are top international pundits who understand the subject of money and international banking. Dare I say, as well as I do, no room for false modesty. And one of the dudes, Alistair McLeod, actually, I think understands it even more than I do. He's a really clever sod.
I was going to say, a rare recommendation there, Godfrey. Oh, he must be quite the man. So when it's out and ready, updated in a month's time, where would people go to get it? Would they go through your website?
It'll be available as though it's on Amazon. It'll have electronic. I would argue against don't get electronic because the graphs are all going to be clever and in color, and Kindle doesn't really do it. You'll save yourself a couple of quid if you buy it on Kindle, but you know, get the real thing. It's more of an aid memoir. Yeah. It's an aid memoir rather than the book. It'll carry more copy and graphs than this actually does. But a guy wrote to me when he bought it, a Wall Street guy, right? And he emailed me going back a couple of years. He said, "Brilliant! It takes 40 minutes to read. This new one will take a little bit over an hour to read." And he said, "I'm actually in financial services on Wall Street." And he said, "I learned a lot from it. And moreover, I understood it. It's really for the intelligent lay person, possibly for a financial journalist, but they're really a bit too stupid to understand it. But if you were a surgeon, a doctor, a cab driver, it doesn't matter who you are. If you're reasonably bright sort of individual and you're interested and you want to know, because most people in my experience, as you go about your business and these things, they know they're being screwed by the system. They know the banks are screwing. They know politicians are, but they're not quite sure how the banks and the politicians are doing it. And this will show you how the buggers do it.
Yeah, we've blown the whole gaff on them. Well, Godfrey, it's been fabulous as always. We've come to the end of our time. I want to thank you very sincerely for coming on and certainly educating us on some of these issues. It's been great fun and always a pleasure to speak to you, sir. Always a pleasure.
Great pleasure. Thanks for having me.
And to everyone who's watched this, please, as the normal routine, share it round, spread the word. Let people see this. Let people get informed and know what's really happening. And if you like it, subscribe to the YouTube channel. There's lots more excellent content and lots more of Godfrey as well on that channel. So you'll get more than you'll fill. But for now, from me and from Godfrey, I'd like to say a good night to you all.
Good night.